Hi, we're going to look at tax return today, and then from there we will go on and look a bit on assessment as well as appeal. Right, let us start with return. Now, we know that there is a deadline for submission of tax return. Now, first, let us understand that there is a tax basis period for a year of assessment. Now, assuming if you have an individual called Adam. Now, and as an individual, you have to use basis year as your basis period, meaning you have to start from 1st January and close 31st December. Now, assuming this is for year of assessment 2020, so it's going to be from 1st January to 31st December 2020. Now, whereas if let's say you're not an individual, assuming you're a company, we have Edens and Ram Berhad, what would your tax basis period be? Now, it will then depends on your financial year end. Now, assuming if your year end is 30th June, then the 1 year financial period that will end 30th June will start 1st of July. Now, if you're looking at year of assessment 2020, then it will start 1st July 2019 and then close 30th June 2020. Now, when will tax return be furnished? It will always be after the tax basis period. Now, but there will always be a due date that you have to observe. So let us look at the due date. Now, it all depends on the types of person. Now, for example, if you're an individual without business. Now, for this slide or this video, we're going to use example based on year of assessment 2020. So for individual, if you do not have business, remember the basis period is basis year, and that will be from 1st January 2020 to 31st December 2020, and you always do submission of return after that. So just remember that logic, okay? Now, so you're given up to 30th April if you don't have a business. Now, and it will be in 2021, okay? The form you're going to use is called BE. Now, let's say if the individual has business, right, you're going to use B form. And obviously, logic is when business, you have more things, more documents, more transactions. So the Inland Revenue is more gracious and allow you to have a longer deadline. And that's the reason why it's 30th June 2020. Now, let's just say if you are a company. For example, if you have XYZ and Ram Berhad or ABC Berhad. Now, what is the due date for submission of return? Now, it will always be from the date of the year end, you just add 7 months. Meaning if let's say your year end ends 31st December 2020, you have to do submission of return not later than 31st July 2021. Now, let's say your year end is 30th September 2020, then it will be 30th of April 2021. Now, and it's the same if let's say you are a limited liability partnership. So the example given here is XYZ PLT. So the word PLT, it's actually the word for LLP, which is actually in the Malay word Perkongsian Liability Terhad. Alright. Now you're going to use a form called PT form. Same thing, the year end plus 7 months. And if you have a trust, it's the same thing. You're going to have year end plus 7 months. And trust, depending on what kind of trust, it will be in TA, TC, or TR, because you have unit trust, you have REIT, and so on. But this is all more relevant for the advanced taxation student. Now, but then in the exam, right, you don't really need to quote the name of the form. You don't have to say we're going to use BE form or B form or C form. You don't really have to do that. You just have to use the word prescribed form. Understand? Prescribed form. Okay? Right. What about the payment of tax? Okay, the last day for you to remit your income tax is also the last day for you to pay your income tax. So it's the same due date for the income tax return form. Okay? Now, so take for example, Eve operates a cafe business. She has submitted a tax return. Now, because she has a business, she uses B form. For year of assessment 2020 on the 13th of May 2021. Well, that's on time, right? Because the last day for her to do so is 30th of June 2021. And the form indicates that there is a tax payable of 7,300 300 ringgit. She has paid a total tax installment amounting to 3,300 under CP 500 installment scheme. Now, if you remember, CP 500 talks about the 6 bi-monthly installment under the direction given by the Inland Revenue. Okay, so how much tax that she needs to pay now? The final tax liability is 7,300. She already paid 3,300. There is a balance of 4,000. And this 4,000 she has to pay not later than 30th June 2021. Now, what if she missed 30th June 2021? There will be a late payment penalty, right? But how much will it be? Now, so the moment you pay on or after 1st July 2021, we will have to add 10% penalty, which means you just have to add 400 ringgit. Now, how much more penalty you're going to pay, assuming if you don't settle this amount? Now, the answer is none. There's only one penalty, which is just 10% on the balance of the tax payable. Now, assuming if you have not settled this amount, what is the most likely thing that the Inland Revenue will do on Eve, the taxpayer? Now, first, the government will blacklist her from leaving the country. And then the government will take civil action, which means they will sue her, like a creditor sue a person who failed to pay their taxes or to pay their debt. All right? Okay, so that's the first part to do with returns. Okay, what about assessment? Now, when your return is furnished, the notice of assessment is deemed served on the same day. And the amount of tax that's in your return will actually be deemed as your tax payable. Now, question is, what if you don't have a tax payable in your return? Meaning, what if that year your company or your business make loss? So under your aggregate income, you have very little amount and your current year loss is bigger. So until the end, your chargeable income is 0. Now, then you will not have an assessment. All right. Now, what will you do when you do not have an assessment? We'll deal with this topic later on. Okay. Now, let's look at the issue called time bar. What is a time bar? Now, time bar generally is 5 years. The whole idea of time bar is to restrict both the Inland Revenue as well as the taxpayer to reopen a tax file and to generally make any more changes to the tax file. So let's say, for example, if you have year of assessment 2020, you just add 5. That means the time bar is 31st December 2025. Now, that will be the last date for any assessment or any amendments to be made to that assessment. Now, I'm giving an example, okay? So let's say example given here is Inland Revenue conducted a tax audit for year of assessment 2015 on the 8th of September 2020. Now, look at why 15. If you add 5 years to 2015, it's supposed to be 31st December 2020. So there's nothing wrong for the Inland Revenue to carry out tax audit in September 2020. Okay, it's not time bar. However, the Inland Revenue raised an additional assessment on the taxpayer on the 15th of April 2021. Now, which is after the time bar period. So is that assessment valid? Well, legally speaking, it is not valid. So the Inland Revenue is issuing an assessment which is invalid, and it's actually right for the taxpayer to just ignore it. Okay. Now, having said that, I need you to be careful with an exception that Inland Revenue has the power of raising an unlimited assessment. Now, an unlimited assessment basically is referring to an assessment where there is no time bar. And this is permissible under the law if there is an element of fraud, willful default, or negligence. All right. Now, so another thing that I want you to take note is when there is a transfer pricing element. Now, this is more relevant for those advanced tax students again. So that when you have an associated person and you have a transfer pricing element, And the Director General has exercised his power under Section 140A. What is that power? A power to substitute price when the transfer pricing is not at arm's length. Now, in that case, right, the law clearly said that time bar will be 7 years and not 5 years. All right. Now, that's a bit on time bar. Now, I don't intend to actually go through one by one what kind of assessment that we have, but I just want to quickly let you know that there are many types of assessment out there. If you've forgotten, maybe you can pick up your notes and read again. You know, we have increased assessment, reduced assessment, additional assessment, composite assessment, and even advanced assessment. All right. Okay, so that is about assessment. Okay, what about appeal? Now, if you are aggrieved of an assessment, meaning you're not happy with the assessment, you find that the taxes in the assessment, they are actually higher than what you think it should be. Then what you can do is to appeal within 30 days after the service of the notice of assessment. Now, what you must do is to use a prescribed form, and the form name is called Q form. You have to send in a form and appeal against the assessment. So you have to indicate which year of assessment that you've been assessed, which assessment is that on what date, and then you must submit a valid ground, reason. You don't actually need to submit all the supporting documents, but you have to write down all the valid ground. And of course, if the Inland Revenue wanted to know more, they can actually request you to furnish it to them. Now, what is NONC? Now, we said just now, right, you can only do an appeal against an assessment. And I've told you just now, you only have an assessment if your tax return has indicated that there is a tax. So what if you don't have a tax payable in the return? Like I've said just now, you've made a loss, you don't have a chargeable income, so there is no assessment. See, when there is no assessment, you can't appeal because assessment is not there. Appeal is on assessment. So what is the solution? Now, solution is you have to apply for NONC, which is a notice of non-chargeability from the DGIR. Now, when you have applied for this notice, when the notice is issued to you, then you're allowed to appeal against the NONC within 30 days from the date of being so notified. All right, now that's a bit about NONC cases when you do not have an assessment. Well, you see, if you want to make an appeal, right, the appeal has to be within 30 days after the service of the NOA. What if you missed that date? Now, if you have an expired appeal, meaning you did not submit an appeal within that 30 days period, now then the right thing to do is to apply for an extension of time using a form called N form. Now, but you must take note that there is a time limit for the submission of N form, that you're only allowed to submit 7 years, within 7 years, after the end of the expiration of the period for you to make an appeal. All right. Now, this is basically a bit about the appeal that we see over here. Now, what about Section 131 and Section 131A? Now, Section 131, right, is actually a relief in respect of error and mistake. Now, if let's say you've submitted a return and you've made an error in a claim of your tax relief. Now, assuming that you should have claimed 8,000, but you have in mistake claimed only 2,000 ringgit. So the effects is you've overpaid your tax, so you want a refund. Now, in that case, what you do is you should write in, and on the ground of Section 131, relief in respect of error and mistakes. If the Director General is satisfied with what you furnished to them, then a repayment will be effected. Now, do take note that Section 131 is applicable to cases that you have overpaid your tax and you want a refund. Now, if let's say you've underpaid your tax and you wanted to top up the taxes that you want to give to the government, then the mechanism is called amended return. Okay, what about 131A? All right, before that, you have to remember that there is a time bar rule that you have to observe, meaning Section 131 can only be used within the time bar period. Now, what about 131A? Now, 131A is actually a kind of relief, but it's other than error or mistake. It's not an error, it's not a mistake. Now, I'll give you an example. Let's say withholding tax was not compliant. And you know, if you have not complied with withholding tax, you're not allowed and you're not supposed to claim the deduction when your return is first furnished. So you didn't claim the return. Well, subsequently, you've settled the withholding tax as well as the penalty, and now the deduction should be claimed. But you've already submitted your tax return. So how do you claim the deduction? Now, this is not called appeal because it's very clear that you can claim the deduction. There's no point of appealing. So how? But this is not an error because this is something that you've intentionally not to claim, knowing that you have not settled the withholding tax. Now, that's why we have a provision called 131A. So this is where you will use Section 131A to request Inland Revenue to give a deduction to you, all right? And of course, upon deduction given, your assessment will be reduced and then your tax will be refunded. Now, but you must take note that this should be done within a year after the end of year in which payment is made. It is not given in the law, but it's actually given in the public ruling as part of the guide. Inland Revenue give it to the taxpayer. All right. Now, so I hope in this short video we have a rough idea, a quick overview about return, assessment, and how do we appeal, and what is Section 131 and 131A. Right, thank you guys for watching. Again, I wish that you have a happy revision and do well in your exam. Bye-bye.